We all approach investing so differently. Some are patient, watch from the sidelines kind of people, while others thrive on these quick market moves. It actually got me pondering, how do we define what an investor type is really? I know what you're already thinking. Oh great, another video trying to put me in that box. But here's the thing, understanding your natural investment style isn't necessarily about finding limitations, playing to your strengths. Hi, my name is Rohit Das, and hopefully you'll find something valuable in this channel when we talk about life, finances, and career. Let me introduce you to the 5 broad types of investors that I have observed over the years, and I bet you'll catch yourself nodding along when we hit that one type that matches your style. First is the gardener. You know what's fascinating about gardeners? They don't stress about whether the tomatoes will be ready tomorrow. They just plant the seeds, water them regularly, and trust the process. You set up those automatic 401ks or RRSP contributions, maybe throw in some index funds, and basically you're planting your own money seeds. It's not flashy, but man, does it work. Here's what the gardener is special for. They set up automatic investments like clockwork. They see market drops like seasonal changes, just a part of the cycle, nothing extraordinary. They focus on steady growth through systematic investing, and they rarely check their portfolio, maybe once a month. For example, my dad is totally a gardener. Every month, like clockwork, he used to put away this little amount of money into his investments. Doesn't matter if the market went up, down, sideways, he just did not care. And you know what? Over the years, his portfolio has actually grown like an actual garden, slowly but surely. And even today, there's nothing fancy or flashy about it. Another type is the architect. Think about it. An architect doesn't just randomly stack bricks and hope for the best, right? They plan everything to the smallest possible detail. That's exactly how these investors approach the market. The architect approach is quite interesting again. They research companies like they're solving a puzzle. Every investment decision is intentional and has a clear why behind it. They're building something to last and not just for quick gains. Market dips, they see them as opportunities to strengthen their foundation and portfolio altogether. I've got this friend who's a perfect example. She spends hours reading the news, analyzing business models, and going through annual reports. It's not that she knows everything about every aspect of the company she invests in, but she knows enough to say that she's done her research well. And not surprisingly, her portfolio is like this well-designed building comprising of solid companies with great financials, excellent business models, and future earnings potential and cash flows. Sturdy, balanced, and built to last. That's exactly how architects do it. Ever watch surfers? It's fascinating how they read the waves, know exactly when to paddle out and when to ride one in. That's what the surfer type of investor does in the market. I actually know a surfer pretty well. He's also my childhood friend. Let's call him Perry, because that's what his American name was at the call center where we worked together during the summer when we were 17 and broke. This guy doesn't get emotional about his trades. He just watches the market waves, catches the good ones, and then just knows when to get out. Pretty cool, right? Here's what makes the surfer different. They're always watching market trends and patterns. They don't get married to their positions. They're comfortable riding both up and down waves, and they know when to paddle back to the shore and exit their trades. The interesting thing about surfers is that they don't try to catch every single wave, because then they won't succeed. They're patient enough to wait for the right ones. And when they see a wave losing momentum, they don't just try to fight it, they just gracefully exit and wait for the next opportunity. Maybe Perry, you can join us and tell us how you do it when we hit 1 million subscribers on the channel one day. At this point, you don't even know that this channel exists, so that's pretty cool. Then there's the chess master. What's interesting about chess players is that they're always thinking 3-4 moves ahead. Unless you're Grandmaster Magnus Carlsen and can beat Bill Gates before the game has even properly started.
Oh, that was quick. Oh, that was that. I'd usually last longer, I think.
Yeah.
That was an incredible show. This is also where you are more of a trader than an investor. One of the main differences between the two is that you play on different time horizons. I remember watching this guy trade at a Bloomberg terminal. He'd have multiple positions open, all interconnected like pieces on a chessboard, options, futures, hedges, the whole deal. Very intense stuff. Here's what makes these people unique. They understand and thrive on complex trading strategies. Every move is very calculated and planned. They're masters at managing risk because the downside risk is, let's just say, scary. And they think about success in terms of probabilities and not certainties. The important thing about chess masters is they don't get emotional when trades go south. Potential losses are baked into their strategy. Like this trader that I just mentioned, when his positions went red, he doesn't panic. He just adjusts his strategy and moves on. Finally, we have the athlete, or more specifically, a sprinter. What's cool about observing professional athletes is that they have this intense focus. They train relentlessly, maintain strict discipline, and perform under intense pressure. That's exactly what the athlete type of investor is in the markets. Again, athletes, they're very much traders and not really investors. Their discipline and intensity are at another level. Here's what makes the athlete different. They're lightning quick decision makers. They're in and out of positions within the single day usually. They've got nerves of steel under pressure. They follow a strict trading routine, and they treat their trading like a professional sport. So how can you figure out what type of investor you really are? We can cut it multiple ways, but I think if you really don't want to overcomplicate the whole thing, it comes down to 4 simple tests. The first is the time and energy test. How many hours can you honestly dedicate to managing investments? How actively do you think or do you want to be involved? What's your daily schedule like? The next is the money test. What's your total investable amount available? How much can you actually afford to lose without affecting your lifestyle or your life even? What percentage of your savings are you planning to invest? The third is the temperament test. How do you typically react to market volatility? What's your natural bias, preservation or growth? How patient are you with investment decisions? And then finally, the knowledge and experience test. What's your understanding of different investment vehicles and products? How many market cycles have you actually experienced? And what is your track record with different investment styles? Let me break down what each investor type typically looks like. The gardener is perfect for beginners. They only need maybe 1 or 2 hours monthly, invest regular small amounts, and maintain a patient, steady temperament with just a basic understanding of markets. Moving up in complexity, we have the architect who dedicates a good amount of time weekly or monthly to study companies, building reasons why they should invest in or exit companies called as investment thesis, and very importantly, brings an analytical, methodical approach backed by deep understanding of fundamentals. The capital deployed here can vary. The surfer sits somewhere in the middle with moderate to large capital. They're adaptable and flexible in their approach, relying on strong technical analysis skills to catch market trends. Then there's the chess master who commits and deploys significant time as well as capital and maintains a very strategic, calculated temperament with expert knowledge across multiple financial and investment instruments. Finally, the athlete represents the most intensive approach. Investing or trading is their full-time job most times, and they work with large trading capital, making quick, decisive moves backed by advanced market strategies and expertise. So hopefully you can see that each type requires progressively more time, capital, and knowledge, but none is inherently better than the others. It's all about finding the style that matches your aspiration, resources, capability, and personality. You just have to be honest with yourself. Don't try to be an athlete if you cannot handle the stress of quick trades. Don't force yourself to be an architect if you don't enjoy reading financial statements. The market's going to be there today, tomorrow, next week, next year, potentially to infinity. It is also unforgiving, no matter who you are. Most of us know at least somebody who got burned in the market and lost a lot of capital because they did not respect the risk that they were taking. So find your style, stick to it, and if advanced strategies are not your thing, just let time do its own thing. If you found this helpful, hit subscribe and and let me know in the comments below which type of investor you think you are. Maybe you're something completely different from the 5 that I just discussed. See you on the next one.